Crypto's in a weird place right now. On the one hand, we just had the biggest liquidation event ever, and a lot of coins, especially meme coins, are down 50, 60, maybe even 80% or more. On the other hand, we have maybe the most favorable regulatory environment ever for crypto, and TradFi seems ready to start tokenizing the world en masse. So what does this mean? I think we could see a return to quality soon, where some of the projects that have been building on-chain businesses, building on-chain products that are being used over the past few years and haven't really gotten a lot of hype recently, I think there could be a return to quality in some of those projects in the near future. And in this video, I'm going to talk about what they are and some strategies for identifying them. Now let's get into it. To start, let's zero in on what I mean when I say that crypto is in a weird place right now. If we look at performance recently, we just had a huge crash. These are meme coins, which is maybe the most popular sector with retail over the past year. And these coins are down big time, bigly. You've got favorites, multi-billion-dollar market cap coins that are down 40, 50% in 30 days. If you move down, you see a lot more that are down even 70% or more. And a lot of that is just in the past 7 days. And keep in mind, this is even after a bounce the past 24 hours following liquidations the day before I made this. And then if you look at actual liquidation volume, here's the co-founder and CEO of Bybit saying that he estimates it was around $8 to $10 billion, and that the actual numbers that were being reported as 2 billion were too low. So 8 to 10 billion, that is a record for most crypto liquidations ever. And I know a lot of people are down big right now. So what I want to say is, first off, remember that money is temporary. Basically, everyone I know who ever made it big in either business or trading was zeroed out at some point. And by the way, I would recommend trying to make it big in business if you have the option, because that's going to be a lot more dependent on your skills and less dependent on luck. There's very few people who actually make it big in trading, and there's definitely some survivorship bias there. But here's a story for you guys real quick, especially for those of you who have been watching this channel for a while. I started this channel back in the summer 2021 because there was a huge crash in May 2021. I had been investing in crypto for a while before then, but I was DCAing Bitcoin through 2020, rotated into things that were riskier than I should have, kept rotating down the risk curve because I wasn't happy with gains, and basically ended up losing all those gains that I had accrued over the course of 2020, and honestly felt kind of like a moron. And to make matters worse, I didn't have any money to buy the dip because I had lost it all in the crash. And so I said, okay, well, one way I can get exposure to the market, I had at the time, I thought, I want to start a protocol. I can start making videos and I can meet some interesting people in the industry and I can share my strategies for DeFi. And since then, I have not started a protocol. However, I've succeeded in many ways beyond what I ever thought was possible, where I've worked with many of the biggest names in the industry, literally all born out of me trying to figure out how to cope with a crash. So maybe some of you, if you lost money recently, you can do even more than I've done, right? You can go found the next $1 billion protocol. Because what I also want to say is, despite some things in crypto not looking so good right now, there's other things that look phenomenal. Here we have Larry Fink just last week saying he wants the SEC to rapidly approve the tokenization of bonds and stocks. So SEC, is now turning more favorable towards crypto. You've got the CEO of biggest asset manager in the world calling for them to approve the tokenization of bonds and stocks. And then you look at the actual value of real world assets on chain. It is at an all-time high, but it's at $8.4 billion. Like, do you guys realize how small that is compared to the total addressable market? Here, the total addressable market is in the trillions. Actually, probably the tens of trillions of dollars. Tens, maybe even hundreds, right? It's a lot. Think about every asset in the world. And then you've got things that aren't even tradable right now. You've got things that are the long tail of assets, the massive long tail that are not very liquid, that could be made liquid through tokens. So you're going to have all that value come on chain, and protocols that are positioned to capture it could be primed to get some attention. So what I'm going to do now is I'm going to take a look at DeFi Llama, and I'm going to be looking for protocols that generate fees and revenue. By the way, DeFi Llama, phenomenal set of dashboards. I'm the head of growth for this website. Remember my story a minute ago about how I've been able to work with some top tier people in the industry because I started this crazy YouTube channel. Well, DeFi Llama is one of them, so I'm head of growth, and what we're going to look for on here are protocols and categories where people are actually making money. And so to start, I'm going to look at categories. We're going to say, okay, which categories are actually profitable? And so I'm on their categories page, and I'm going to sort by combined 24-hour revenue so we can see which categories are actually making money. And we see number one is stablecoin issuer. So we zero into that. That is Circle and Tether. Now, Circle and Tether, money machines. Unfortunately, there's no way to invest in them, at least until Circle IPOs, which allegedly is happening at some point. But what you can invest in are other pieces of stablecoin infrastructure. You could invest in either on-chain competitors, or those can be a little bit risky because Circle and Tether have pretty strong network effects, especially in terms of payments. You could invest in other things such as wallets that are being used for stablecoin payments, different sorts of exchanges that are building solutions for people to swap forex and stablecoins, and the list goes on like that, right? But there's a lot of money moving here, so I would definitely be taking a look at that. And also, as I've reported on this channel, paying attention to on-chain competitors, because these have very strong network effects, but that doesn't mean that a third player, maybe a crypto native player, won't be able to enter the mix. You have DEXs. So yes, we all know trading is one of the main use cases of crypto. And if you look at the top revenue generating protocols here, you're going to see some familiar faces: PancakeSwap, Hyperliquid Spot, Aerodrome, Radium, etc. Going down the list. So that could be another vertical that's actually generating money that could be considered quality. Now, I think the thing you have to look in here, if you're looking for a return to quality, and part of the reason why I'm honing in on this is there's this reflexivity to price, right? And anyone who watches this channel knows that I've not been a necessarily hardcore anti-meme coin person. In fact, I like to report on the stats from meme coins because I think they can be a powerful stress test as well as a powerful user acquisition tool, and speculation is one of the uses of crypto. But if you're talking about a return to quality and prices down, probably the volumes are going to take a while to recover, maybe a really long time, right? And so I would look for DEXs here that are not as reliant on meme coin volume. You can already see, for example, that the revenue on Radium is below some of these others. So you've got PancakeSwap, Hyperliquid Spot, Aerodrome, for example, that have higher revenue. Now, and then we're moving down the list. We get launchpads, Telegram bots, wallets, trading apps. I'm going to look at all those quickly. So first, we'll look at launchpads, Telegram bots, and trading apps. Then we'll look at wallets. The reason I'm combining all of these is you got Photon, Moonshot, trading apps. You've got Bullish, Trojan, BonkBot in Telegram bots, and you've got Pump.Fun is basically the reason launchpads is so high. A lot of these are very tied to meme coins, and some of them are not even investable. In fact, a lot of them are not. But yeah, a lot of these are tied to meme coins, which doesn't necessarily mean they're a bad investment, but to consider this revenue to be something that people would return to in a period of low meme coin volatility, you have to believe that it's going to translate over to a time when people are not trading meme coins as much. And again, if you watch this channel, I'm pretty bullish on Solana. So I think there's a good chance that more quality tokens get traded on Solana as well. There's incredible stuff happening with DPIN. There's a burgeoning DeFi ecosystem. But I would expect that the revenue on a lot of these would slow down with time. I'll say that. Not to mention, a lot of these don't have tokens, so there's not much you can do there. Then we've got wallets as well. Now, wallets notoriously don't usually have tokens, but Phantom, Coinbase, Trust Wallet, MetaMask. And I think it's interesting to see the high revenue among wallets because most of these have additional fees compared to DEXs, and they don't actually manage liquidity themselves. So you can see the TVL is 0. They're just a front end. But what this is showing is that controlling the front end, controlling distribution for users is actually proving to be a pretty lucrative business model. In fact, if you look at the categories in terms of how much value they're able to capture, it's actually almost as lucrative as DEXs. And if you were to combine the Telegram bots, wallets, and trading apps, which are all solely front ends, not back ends with liquidity, then it's actually going to be as much revenue as the underlying exchanges. Moving down the list, one more category I want to look at is lending, which you think about DeFi, finance, lending is one of the core applications of it. And it turns out that there are some lending protocols that have managed to grow quite a bit and are building sustainable on-chain businesses. And Aave is one I want to zero in on, right? Because Aave, heard about it from 2020, 2021, if you were around then. But did you know that Aave is actually, it's near an all-time high in terms of TVL. And if you look at revenue, so these are fees that the protocol is capturing, January, actually, best month ever for Aave. So it's in this multi-year uptrend in terms of both deposits, in terms of revenue. And I think a lot of these things are ready for prime time. I think as you see both more crypto assets move from exchanges to being active on chain, you've already got better wallets and user interfaces. And then you have this tokenization, right? You've got Larry Fink talking about tokenizing everything. I think a lot of these DeFi protocols that are battle tested over multiple years are very, very well positioned right now. And so Aave, I'll say, is one that is this is the sort of pattern I would look for. Another way that I would look for protocols with strong fundamentals is go over to the fees and revenue section of DeFi Llama. They have tons of protocols on here at this point, over 500. And what I would probably do is I might look at 7 days or 30-day revenue. But what I would really want to check is this P to F and P to S ratio over here. So we zoom in a little, that's market cap over annualized fees. And this one is market cap over annualized revenue. So we'll sort by market cap over annualized revenue. And we can look at the protocols that actually have relatively low market caps compared to the revenue that they're bringing in. So to highlight a few, we've got Gamma, we've got Dex Tools, we've got SideShift. There's a whole bunch here too. I'm just picking out a few that are interesting. Here's one that's interesting, right? We've got this Vader AI as an AI agent we had talked about recently on the channel, Beefy. So you look at some of these here, and what you really want to look for is an uptrend in revenue. So this one, it's been mostly flat. Okay, this one, okay, that's like pretty strong uptrend, but definitely tied to meme coins. This is a trading app. And so you can see that it started to dip off recently. Would want to see whether this could resume its uptrend now that meme coin mania is slowing down. This one, fairly strong growth. Again, maybe some concerns of slowing down over the past weeks, but the whole market has. This one here, let's look at it weekly, definitely tapering off. This one, actually, Beefy, I'm going to say this is probably the strongest growth pattern of any of the ones we've looked at so far, where even in recent weeks, it's not necessarily at a peak, but it doesn't really seem to be dipping as the market has dipped. And what Beefy is, it's a yield aggregator, so it's like a front end for you to deposit into various protocols, and it does things like automating compounding in those protocols. Another thing I might do to find protocols that actually had strong fundamentals rather than being narrative driven would be to look at a full year. Now, a year in crypto is like a decade in the regular market. But if we look at the highest revenue protocols over a year, then we see protocols that actually have been able to maintain some staying power over the pump less spring, relatively stagnant summer, and then the more recent bullish period, the past 3 months. And so one that jumps out here that we hadn't talked about previously was Maker, so MakerDAO, and this is actually one of the strongest fees and revenue charts, maybe the strongest we've looked at today, where you look at this and you say, okay, it is near an all-time high in both fees and revenue. And it's just been growing consistently, right? You would see some lull over the summer, but it's got a very strong growth pattern where in each successive good period for the market, it ends up surpassing its previous peak from the last good period of the market. So this would be another one that I would say looks very interesting, and also another OG DeFi project that was around in 2021 and then has been adding new features and improving their protocol during the bear market and into this bull market. By the way, if you want to learn more about these sorts of stats, check out my newsletter.dynamodfi.com. Every single week, I send out a piece of on-chain analysis among top readings, and then for premium subscribers, I send out more frequent deep dives on on-chain analysis and narratives. And if you want to see more videos like this, let YouTube know by liking and subscribing. Till next time, this is Dynamo DeFi.